Good morning, everybody. It is Wednesday, January 19th, 2022, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. So, real quick, just to review yesterday, remember that, coming in, we said everything looked really, really bearish. Looking at the overnight low, which let's see where we were at that point, believe was this swing low down here. We noticed that pretty much every time frame had a nice bullish argument from that low, but we were in a very, very bearish market, and it looked to me like we were going to continue to sell off. However, we wanted to keep in mind there was potential that if we held that overnight low, we could have gotten some decent move out of that level. But again, we're in a very bearish market. The bears seem to jump in whenever there's an attempt to push higher, and that's pretty much exactly what occurred here, pretty much right off of this supply area from the overnight session. So you can see where we came up here, just about 1375, maybe 14 even there, and we sold off into that level that I just mentioned. When we came back up, you can see we came right into it, tested it, kind of got a little breakthrough, maybe by a few ticks, and then the failure there. And we were basically sellers. This was just before the open, so we came into that supply area, failed from there. And interestingly enough, if you look back, where did we find really strong support just a few days earlier? Right off this 05 area. In fact, the wicks on the 10-minute come down to that 05 area. The bodies of those candles are right here where you see the magenta line for today. And it's just, again, interesting to note we break through that support area, come back up into it, and find the resistance there and fail. Now, there are two kind of interesting things to note. There were two levels we were watching yesterday as and expecting them to be potential good areas for the bulls to jump in and bounce out of. The first one, if you guys remember to yesterday's pre-market, was 45.78.75. Well, look what ended up happening here. Pretty much right while we were trading, I had told you if you're short, you want to take profit right in front of there just in case you do get some type of reversal. And sure enough, right off the level, we broke it by 2 ticks and pushed from 78 all the way up into 4,600 for over a 20-point push there. So pretty great reaction there. And then once it failed and came back lower, the next area we were looking for support was this gray shaded area. And I told you that you either, in my opinion, the way I would have done this was if you wanted to buy the market, take a trade right off of the top end of that shaded area. And if the market does not bounce from there, you take a stop out and then you try the bottom end of that shaded area. Well, what ended up happening was they came right to the top of the shaded area, to the tick, and bounced out again for another 20-point push higher. So to the first two levels we expected as support yesterday ended up holding within literally 2 or 3 ticks for a 20-point or greater push out of there. So ended up being a pretty good read of the market yesterday. And again, like I said, we found some shorts. I took a short at some point kind of coming out of the open. I forget where we were. I took a short right over here as we were breaking lower and expecting again the test of that 78 for my larger target. So let's see what happened here in the overnight session. We continued to sell off. Again, not too surprising given the context of the market right now. And we've come down and we found a new support area. Now this level, I don't think we've mentioned at all. So this 45.35, 45.36 doesn't sound familiar to me. And when I look back to some of the previous price action, even on this shorter time frame here, going all the way back to when we were last over there, I don't even see anything interesting from a previous price action perspective. So, and what we say, 36, 35, yeah, there's really not too much there. There's maybe some decent support and resistance, but not really anything that stuck out to my eye. So we did find pretty good support there, despite not really seeing anything. We had the eye level at 40.25. So they broke it by just under 5 points. And you can see it was really just kind of a look below and then come back up. But we definitely did not nail that. So here we are, and we're getting this nice impulsive push out of that level at 35.25, our overnight low. And let's take a look and see what's lining up down there, and then we'll consider some of the good areas to trade this morning. So as usual, we'll jump up, we'll take a look, we'll do a quick sweep through the high time frames. And remember, we said on Monday, or I'm sorry, Tuesday, the first day of this short week, that the higher time frames here, when we look at the monthly, the weekly, and the daily, are a total mess. We have this. In fact, you can just go back to yesterday's video if you want to see what we said about up here. It looks very, very ambivalent, lots of bearish clues, and when you have a lot of high time frame bearish clues up top, it can lead to some pretty big corrections, right? So we'll see what happens here. Again, that 3-month bar, we're below 50% of the range of our current bar that we're developing. We're above 50% of the previous bar, but we're below 50% of the current bar. So again, it's very ambivalent, funky looking up there. So coming down into the daily, remember we've been talking about potential bullish divergences as this pulls back. And the reason I say potential and the fact that we need to kind of watch this since it's still in development is because things like this happen. So yesterday we said, hey, we push lower, the RVI is a little bit higher. There is potential here that could be where we get a bullish divergence, but we would have to wait for the next candle and the next candle. And what ended up happening was, well, it just continued to follow through lower, and so did the RVI, right? Continued to come lower. So there's no divergence there. However, looking back to the major swing low, remember back to this pullback to the 50% of that leg, that really strong push towards the end of last year. If you look at the RVI when we were back down there and compare it to where we are right now, we definitely do have what could be an argument that there's divergence if you compare the two lows. Not the kind of thing I would like to see, like you guys know I say. I do like having a nice local bullish divergence, maybe like something like this setup from this low to this low, coming up all the way to there and having that. But, hey, there is an argument there. Let's look at and outside of the divergence argument, if we just look at candlesticks here, remember that this candle looked like it could be a potential reversal. We had this huge push down, really strong push back up, and a close at the highs, and it looked like we could potentially, maybe this would have been a nice healthy retracement of this leg here from about 45.70 to 47.40. But then look what ended up happening. They tried to push, they broke the previous daily high there, and then it just failed. So we've come back down, and like I said, things look really bearish from the candlestick perspective since we have been breaking through all of these attempts by the bulls to reverse things and push back up to recover. And we've broken the bottom end of both of those major wicks on the daily. So lots of bearish looking stuff here. And again, just like I said yesterday, we have to watch this. This could be an argument for a bullish divergence, especially if this holds, the next daily candle opens, we start breaking higher, we would have a nice bullish divergence, assuming the RVI closes right there. So we'll watch that and we'll see. Let's get down to the 4-hour here. 4-hour has another extrapolated bullish divergence from the low. You'd have to swing all the way back to the December 19th low, just before the Santa Claus rally there, and you could make an argument. Again, not really what I love to see, but since it is there and we do have the subsequent candle going on, there is the argument I don't want to ignore. So that's there. Again, daily and 4-hour showing potential bullish divergence, but it's a much weaker argument than that I would like to rely on. And so from the 4-hour perspective, notice where we're pushing up into now. Right, so we've got this nice leg down from the highs of January 12th all the way down to where we are right now. A 38% retracement of the whole leg is really probably right into, that's what I thought, right into the magenta line, which is 50% of the previous day. And then we do have the two swing lows that I believe I labeled yesterday. We'll probably see that labeled on the shorter time frames, coming off those lows right around, remember that's that 46.05 level. We have actually an eye level running right across right there. So 38% of the whole push down for this leg would bring us right into the swing lows back here, our eye level, and 50% of the previous day. That could be trouble for the bulls this morning. And then notice that the 61.8 retracement of the whole leg is right into the previous daily high and right into a pretty good support level here that turned into pretty good resistance. So we've got some good confluence from a retracement perspective with the price action, which I do like. And so those are going to be two key levels to watch and see if there's any type of resistance there for the bulls if they do start to push. And then from this, anything else from the 4-hour, I don't see any type of exhaustion in the current bounce. Doesn't mean it's not going to turn right there and continue selling, but I don't have a nice strong 4-hour bearish signal from the current overnight high. Let's go down to the 60-minute. 60-minute at least has a local bullish divergence from the overnight low, so it looks really nice. I do have the retracement up there again showing the 38 coming right just above the swing lows there at 0575, our eye level, and the power level there at 4610.75 or 4611. Sometimes when you have the previous daily range at such a setup that 50% of it is not exactly to a tick to a a quarter, it ends up coming between one or the other. So that's up to you. Is it 4610.75 or is that 4611? We're talking about the difference of a single tick, right? Anyway, so we've got the 38 right there. And then 50 brings us just about into this swing low right here. And you guys know I'm a big fan of these kind of naked swing lows in the market. So 50% would bring us right into that. And then our eye level sitting there at 42. And then a little bit deeper, like I said, that 61.8 is right into the previous area of a lot of resistance. And I think that covers it for this retracement. We don't really need it on there, right? Because we have everything basically already labeled on the chart. And looking from the top end here, is there a bearish argument from the high? Remember the 4-hour, I said can't really make a bearish argument from divergence perspective. The hourly, I think you could probably make the argument from that previous swing high back there. We haven't broken it yet, and RVI is drastically higher there, right? So maybe a little bit of a bearish argument on the 60-minute, and we'll see what the other time frames say up here. So hopefully that gives you an idea. Notice this naked swing, well actually not, because it really was tested here all through yesterday. I'm going to ignore that. We've gotten through that area, so ideally they bounce just a little bit further and get through the high of that structure there at 95.75. That would be our first little clue for the bulls this morning. So 95.75 getting above it and holding above it. It's the first thing we need to see if we're going to have any faith in any type of continuation from the bulls. And that might mean that the market does pull back somewhere, whether it's to 78, to maybe the shaded area, maybe back to the previous daily low, and then come back up. And once we get it through there, that would be a little bit more of a clue that maybe the bulls are going to regain strength. But we have so much more that we have to get through before there's really any strong clue. I mean, ideally, they're going to have to get up through the previous daily high and probably up through 47, 42 before we're really out of the weeds for the bears. So let's go down to the short time frames, or at least go to our intermediate time frames first and take a look and see from the overnight high here. Like I said, I'm looking just to see, do I have a big confluence of clear bearish signals from that overnight high? I do have a clear confluence of bullish signals from the lows. Remember that the 4-hour and the daily were a little bit more specious as far as the argument there, but it was there. But then we did see 60-minute, now we see 30-minute. We also have 10-minute bullish signals from that overnight low. So very much like yesterday, coming into the open, the overnight low has an argument for the bulls, and even though there's a strong confluence of bullish signals, we're in a very strong bearish trend, so we have to get through a bunch of key levels before there's any faith in that move. So I don't see a strong, I mean, can you extrapolate back to this swing high? And probably not, because you got to cut through that. So I don't see the strongest bearish argument on the 30-minute up here. to agree with that 60-minute signal. And I'm just looking at the highs again. Remember, we'll go back to everything else here. And I guess, yeah, the 10 minutes. So it's kind of a wishy-washy argument for the bears off the overnight high. Much more confluence with that bullish signal from the overnight low. So for whatever that's worth, we're just using that as a piece of information here this morning. Now let's take a look at what we're dealing with. And I like going to the 60-minute because it kind of cleans things up just a little bit here. I want to look at what we're pushing into. So if there's a nice strong bullish push this morning and we start to really kind of eat away at the correction that we had in the market, we're going to want to be aware of what is above us. And we kind of already established a few things here. We've got those major swing lows back right off our eye level at 0575. We have 38% retracement and we have 50% of the previous day all sitting here. And unfortunately, it might be just about a 5-point range, but we have the swing lows pretty much right at 0575, 0550 there. 06. Okay, so yeah, 0506. And then the magenta line, and remember the 38 is just about 2 or 3 ticks above the magenta line. So that area right there, if the bulls are going to be strong, they're going to chug through there. And remember, that doesn't mean they just go right through. It could be whatever the scenario is. Pull back, bounce up into it, pull back, and then eventually get through. It could be a situation where they just cut right through. But I just want you to be aware, even if the market plays around here for a little bit and whatever, if it gets up and gets through there, that would be that first clue for the bulls. Now, obviously, everything looks really, really heavy here. So I am expecting the market to continue going lower, but we have to consider what we have. So we've got 05 to say, 06 to 011. Hey, 5 points, it's pretty wide, but ideally they're just going to hold the actual swing low of that zone there. And if they don't, they're probably going to hold the top end of it. Again, we have strong supply from there. We have strong support. We have the 38 right there, just off these highs over here around 14. So that could be a trouble. If they get through there, I have this labeled on here coming across at 25.50 as a potential area for the market to push into and find resistance. And then a little bit deeper, if they can get through there, then we push right up into this 40.50 swing low here, or I'm sorry, it's the number 38.75 swing low. And then we do have the other swing low there at 47, another 10 points higher. So those are some of the levels we have below us that stick out to me. And this one right here at 25.50, also like the fact that if you just kind of follow the cursor all the way back here, this was a really strong area of, again, kind of bringing in a little bit of supply and demand theory to things here, but really good area of demand where we saw the bulls really rip things higher there. And then again, saw the attempt right here yesterday. And so pushing into that where you have areas of strong demand, I've noticed you also end up finding areas of supply where it goes the opposite direction. So just looking at that, we have all those levels as potential resistance above. Remember, as traders, we don't know what's going to be happening next here. All we can do is be prepared for the areas that make the most sense for interaction. And then we play around that. We have targets based on these levels. And so that's that to the upside. If we get up through all of this mess here, I know there's a lot of levels. If we can get through that, we can get through these 2 eye levels up here. We do have the swing lows sitting right at 95 there as well. We can get through this stuff and get up through 47, 42, which I know is pretty much right back to the all-time high. But that's what we have to get through for the bullish case. On the opposite side, if the market starts to find resistance, whether it's right here off the overnight high or they push into one of these areas above and the bulls just don't have enough strength to continue going, we have to consider what we have below us. Now we have the immediate leg. So we have the overnight low to the overnight high. There are some retracements in there that I want to consider. That we can look at, but then we want to consider if they continue selling off and they can't hold some of the key retracement levels of this smaller leg. And then there's another nice swing high there at probably just about 25 to 30% of 38% of the leg there. They get through that and they get through the overnight low. Let me just make this dotted. That's going to open us up maybe 27 holds. And remember, we have that other, I guess, quote, demand area there where the market really ripped out, sitting right down around 27. So if those things don't hold, I personally think if that swing low back there from the beginning of the Santa Claus rally at say 45.20, if that does not hold there, and I'm just going to put it here for myself visually, down here at 45, just say 20 quarter, they get through that, I would be interested in a short all the way into 44.97 down here. And that's just about a 20-point push. So a pretty good trade if they do end up breaking through that low. And so once they get through that, they get down to 97. We have to start considering the major. In fact, the 60-minute might not be a big enough time frame, but we get through that 96, and we're looking at, what did we say here? I mean, this is the thing that's about this level here, this 20 area. If you look back, and you look to the major swing highs back from September, that was the all-time high at the end of September and was a lot of resistance for a long time. So again, pushing down, getting through all this and coming back into that could be an area of support. And then as you can see, each of these major eye levels is essentially outlining the next areas that we expect for support. So just watch that stuff if they do sell off as potential targets. And again, you probably want to be getting short into these levels and taking profit there. Now we're just about to the open, so we're going to jump down to our short time frames and go to the member section and start looking for some trades.